Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is Sunday. It is September the 11th. It's a solemn day in the United States because of the events that unfolded, about 21 years ago now today. But we're not going to talk about that. We're going to talk about other events that are happening in the world today, including the war in Ukraine, OPEC, and a little bit about energy. But let me first apologize for my recent absence. I was able to host my son and daughter-in-law visiting from Canada with my three grandchildren. One of them, the little one, is 2 years old, and it was the first time I had an opportunity to meet her because Canada has been the world's largest prison for the last 2 years. And anyway, they managed to get out and come and visit us. So that was great. And what I want to do today is talk a little bit about the Russian sanctions, the war in the Ukraine, and who the actual winners are in this war, assuming there are any winners at all. So before we do that, let's take a quick trip down memory lane here and just make sure everybody's on the same page in terms of OPEC. So OPEC and OPEC Plus are not necessarily the same thing on this world map that I have here as a backdrop. The orange counties are OPEC member countries, and the mustardy light orange colored countries are the OPEC plus producers or non-OPEC producers. Of course, the largest of those directly behind my little thumbnail there would be Russia. High oil prices have benefited OPEC plus, which is an alliance of oil producing countries that controls more than half of the world's output. Well, with oil prices still high, and if you're in charge of more than half of the commodity that's supplying the rest of the world, you're doing okay. Who are the countries that have the largest oil reserves? Now, what's interesting on this list here, on the left-hand side, the top 10 largest oil reserves known to us in the world today: Venezuela and Saudi Arabia, right at the top of the list, followed by Canada, who's obviously not an OPEC member. If you're wondering where the United States is in the top 10, the reason why it doesn't come up in the top 10 is because the United States is actually the 11th largest reserve of oil in the world today. So you can see at a glance that the people who actually control the price and output, supply and demand to a large degree for the commodity of the top 10, and with the exclusion of Russia, of Canada at number 3, all of them are OPEC or OPEC plus countries. BP, down here at the bottom right, says primary energy in 2021 grew by the largest amount in history, with emerging economies accounting for most of the increase. Emerging economies referring to their countries in Asia and Africa, especially obviously the two larger consumers, led by China, followed by India. On July the 18th, the Wall Street Journal said OPEC and its allies agreed to boost oil output as demand roars back. Well, that was July the 18th, 2021. However, oil demand in 2021 remained below 2019 levels, according to BP. What else is happening? Well, just a few months ago, CBS News reported on February the 24th that energy prices were soaring following the Russian invasion of the Ukraine. Now, in the United States, the Biden administration immediately said the price hikes were Putin price hikes. Then when the energy prices started dropping recently, the administration said, we've been working hard to lower energy prices for you. So when the prices went up, it was Putin, and when the prices went down, it was the administration. However, don't lose sight of the fact here that when you look at key minerals, and again here I'm quoting BP, the price of cobalt increased 63% in 2021 to an average of $51,000 per ton, and lithium carbonate, which lithium, of course, is used in rechargeable batteries, rose 58%. So when we talk about energy prices soaring or energy prices being high, keep in mind that it is not only oil and gas, because those attract the most of our attention. The Wall Street Journal also reported a few months ago, on February the 25th, that the US and its allies rolled out fresh sanctions on Russia amid a debate over how hard to hit. BP said, British Petroleum, BP said Russia accounted for 20 to 40% of the European Union's oil, gas, and coal consumption in 2021. that is a large supplier, and that's one of the reasons why when the European Union rolled out sanctions to begin with, in footstep or lockstep with the United States, they said, well, energy would be excluded for sure at the start. In March, a month later, the Wall Street Journal reported that Saudi Emirati leaders declined calls with Biden during the Ukraine crisis. The White House fact sheet said results of a bilateral meeting between the United States and Kingdom of Saudi Arabia delivered some interesting outputs. And of course, that meeting took place just a little while later between Joe Biden and Mohammed bin Salman in Saudi Arabia. Other news on July the 6th, so just a short while ago, OPEC Secretary General Mohammed Barkindo died. And what's interesting there is Barkindo's death comes at a time of volatile energy markets, global inflation, growing climate risks, and continued fallout from the pandemic and the Russian-Ukraine war. Geopolitical conflicts and sanctions have led to much tighter oil supplies, pushing prices to multi-year highs amid fears of a global recession. OPEC agreed on Monday, September 5th, to cut production. Now, I just said OPEC had previously agreed to increase production after meeting with Biden. And on September 5th, so just a week ago, they said they're going to cut oil production for the first time in over a year, saying it will pull back about 100,000 barrels per day. It's not a lot of oil. That's less than 10% of what a producer like Occidental Petroleum produces per day on its own. But it's symbolic because if effectively what they're trying to do is manipulate the price in terms of supply and demand. More about that in just a second. Some other news headlines on June the 22nd, the Wall Street Journal said oil price extend their slide with recession fears ramping up. On June the 29th, a week later, they said OPEC and its allies struggled to meet oil production targets. These things are not the same. In fact, they are. One is a contradiction of the other. And then a week later, the same Wall Street Journal reported oil prices pulled lower by dimming demand. So you see all these headlines and you got to try and make heads or tails out of what's going on here. At the end of the day, you're pretty much in a good place as long as you are invested in energy or fossil fuels or oil and gas as we know it today. So why is OPEC a winner in this Russian-Ukraine situation? For one, they're generating more revenue. That's obvious, right? How much more revenue? Approximately $320 billion estimated for 2022. What does that mean for them? Well, they can increase their domestic spending. Domestic spending on what, Mr. Oxy? Well, OPEC countries are generating more revenue, so they have more money to spend on infrastructure. They have more money to spend on pension plans and things like that for their public service employees and so on. They can certainly deliver more social services from a domestic spend point of view. What can they do in addition? Number 3, promote their interests abroad. When you have more money, you can control the narrative in a better way or in a larger way. And for sure, you can buy more propaganda. And nowadays, we're pretty much surrounded by propaganda everywhere we look and at everything we look on a daily basis. We're just being fed propaganda all the time. It's our jobs not only to be diligent, but also to try and discern what is propaganda and what not. So those are 3 ways that OPEC is benefiting from this. What else is happening? Well, the Iran deal is potentially going to be revived. That adds about 1.5 million barrels of oil to the market per day. In other words, it adds almost 1 Occidental Petroleum to the market in terms of supply per day. What's happening in the background? Israeli officials scrambling to influence the Biden administration as the United States attempts to revive the Iran nuclear deal. And the Israeli officials are pushing for hardened positions and no concessions to Tehran as negotiations enter a critical phase. Who's the biggest winner? Russia. So number 5, OPEC plus. Really, I don't really have an opinion on the Russia-Ukraine war. I know many of you do, and some of you have shared it with me. I appreciate that. Thank you. I don't really have any standing, so I don't really have an opinion. These are just hard, cold facts. After the imposition of sanctions by the United States and its allies, in the first 100 days, Russia generated approximately $97 billion more revenue than what it had generated for the same period last year. Reuters reported that Russia is seeing or predicting a 38% rise in energy export earnings this year. Russia is expected to pocket $337.5 billion this year on energy exports alone, according to an economy ministry document seen by Reuters news agency. Sometimes sanctions have exactly the opposite effect of what we anticipate or what we perhaps hope for, or whatever your leanings are in that regard. By the way, as I said, I don't have any standing or I don't have a position. You can tell me in the comments what you think, but I am sharing facts with you. Russia is making money hand over fist as this situation carries on and on and on. Have you noticed, by the way, that no one's even trying to create or sign a peace deal? All the world leaders are just anti-Russia, which, to a degree might be the appropriate thing to do. But at the end of the day, shouldn't there be somebody who steps up to the plate and says, why don't we find a way in which we can negotiate some kind of a peace deal? The Russian oil sector is relatively unscathed. Besides autos, IT, and finance. Besides autos, IT and finance are the two sectors that are the worst hit. This is in Russia. These sectors have the strongest links to the West and are consequently suffering the most. Well, we know finance is suffering in a variety of different ways, and IT I wasn't sure about, but this is according to Janice Klug, who's a senior associate at the German Institute of International Security Affairs. Russia has started to gradually increase its oil production after sanctions-related curbs, as Asian buyers have increased purchases, leading Moscow to increase its forecast for output and exports until the end of 2025. Gazprom, in the meantime, said petrol supplies are increasing to China, but it has not provided any details. Europe remains by far the bigger market for Russian gas still today. Reuters reported that the Russian economy is dealing with sanctions better than Moscow had initially feared, and the economy will contract less than expected. What drives the price? Not the stock price, not the stock price of your favorite stock and mine, Occidental Petroleum, or any energy stock for that matter, but the fundamental driver for the oil price is supply and demand. And then, of course, the cost of extracting and producing oil is an important factor. Oil markets are really composed of speculators who are betting on price moves and hedgers who are trying to limit risk in the production or consumption of oil. Supply is controlled somewhat by OPEC, but remember, OPEC is producing almost half the world's energy, so that supply control is quite significant. And demand is driven by everything from gasoline for cars and airline travel to generating electricity. So there are many factors that come into play in this regard. So I found this study, which is done by Stanford University. This dates back to 2008. So now about 14 years old. This is a peer-reviewed study published by two academics, and they conclude that fossil fuel reserve depletion times for oil, coal, and gas of approximately 35, 107, and 37 years, respectively. This means that oil reserves are available up until 2112 and will be, this means that coal reserves are available until 2112 and will be the only fossil fuel remaining after 2042. Now, when they wrote this 14 years ago, they probably didn't think to themselves that in 2022, we'll be just 20 years away from what they are predicting to be the end of fossil fuels as we know it. Well, I showed you at the beginning of this presentation what the oil reserves are for the larger countries like Venezuela and Saudi Arabia and Canada. And then if you think of it from a consumption point of view, I don't think we'll be running out in the next 20 years or so. I'm not sure I'm going to be an energy bull for the next 20 years or so, but I still am today. The other thing I wanted to draw your attention to is remember that when we talk about the price of WTI or crude, Brent, natural gas, etc., we're talking about futures contracts, right? So these are contracts that are negotiated by the traders. And I've said before in other videos that the largest oil producer commodity price influencers on the planet are not companies like Saudi Aramco or Exxon or Chevron or Shell, or whatever. It's Goldman Sachs and Morgan Stanley, the guys who sell and buy and bid up these futures contracts. So when we saw the nice uptick on Friday last week, where WTI was edging back up to $87 per barrel, talking about October contracts, and keep in mind that the smart guys have difficulty predicting the weather for tomorrow. So predicting oil futures contracts is a trading game. This is not really in direct relation to supply and demand. Anyway, a little snapshot here. This, once again, is from the Wall Street Journal. OPEC is the big winner of Russia's war in the Ukraine, and here's why. That's where the most of the content that I shared with you in this video came from. Anyway, I look forward to your comments. Where are you at? Give me some ideas. If you are in Europe, especially in if you're located in Eastern Europe, tell me what you think. Tell me what's going on there, and let's get the community educated as to where we are and what's going on. As always, I look forward to your comments, right? Because your comments are usually more entertaining and more educational than my videos. But anyway, this is Mr. Oxy, back in the saddle. My family have gone home temporarily to Canada before they hop on a jet plane at the end of this coming week. And they're going to be off to Thailand for about a year. So I'm not going to see them again for a year. So by the time I see my granddaughter again, I just met her. She's 2 years old. When I see her again, she'll be 3. Anyway, on that happy note, take care. Look after yourself. Be diligent and take care of your energy investments. I'll talk to you soon. I'll be back with more. Bye-bye.